Hello, trade pros. Welcome to our morning market update for this beautiful Friday, October the 17th of 2025. This is George Papazov, and I am happy to be here with you today. I think it finally worked. I'll be honest with you guys, yesterday, the day before, I had such a good read and trading plan on the market that worked out like amazing and everything was great. I prepped for an hour each time and then went live and I had issues. Like it said you're live on YouTube and then it didn't save or nobody saw it. I don't know what happened. I saw you guys waiting for the stream to start while I'm just talking the whole time. So it was a little frustrating. We figured out the workaround. The workaround was using a platform like Streamlabs instead of just going off of webcam. I don't know what happened. I'm really sorry I couldn't deliver these updates to you, but I'm also sorry that I wasted so much time doing it. It could have been, yeah, anyways, point is, I was here every single day since I said we're coming back to the morning market updates. There's had a lot of technical difficulties and challenges, but hopefully with today's stream going forward, that's resolved and be here every single morning for you, and it'll actually go live when I click the button that says go live. So that's that. All right, let's get into the update today because we got quite a few things to talk about. We're going to talk about the cockroach moment and the banking sector. We'll talk about some of the levels the options market telling us to watch today. I'll give you my daily levels and the daily trading plan, and we'll leave it off of there. Plus, one moment I think today that it's going to reveal how we go in the next 30 days from here in the stock market. All right, it's come down to that day, and that day is today. So, in today's markets, in Asia, Japan is down 1.5%. Hong Kong is down 2.5%. I'm sorry, I'm fidgeting with this mic. I'm trying to find that sweet spot. All right, Hong Kong's 2.5%. China down 2% as well. In Europe at midday, London, Paris, Frankfurt, all down a significant amount, 1.3, 0.8, and 2%. And futures in the United States, Dow is down 0.8, S&P down over 1%, NASDAQ 1.5%. Not a good start or a good end to the week. All right, crude oil is down 1.2%. Gold, only thing that manages to be up and pushing new record highs, up 1.1 to 4,350. All right, Bitcoin down 7% almost to just around 104,000. 10-year yields down a basis point to 3.96%. All right, that's your market overview. Let's talk about the cockroach moment. Now, I wrote a lot of notes that I'm going to have to look down at, okay, because I'm strongly opinionated about this. Not opinionated, but there's a lot of data that kind of builds on itself. So markets are kind of, a lot of this downside is just a rattling. It's fear of major and regional banks, all right? Because they're taking some major surprise loan losses. It's a surprise to us. It's not a surprise to anyone that works at those banks, all right? Kind of like triggering fears of a credit risk of the past that we've seen with obviously 2008 and 9, which was a housing bubble that imploded. But we've also had credit shocks to the market that have caused massive sell-offs. And that's kind of what it's reminding the market of. And part of the reason we had so much downside from yesterday. But the troubles didn't start yesterday. It started last month when auto parts maker First Brands went bankrupt. All right. Followed soon after that by subprime auto lender Tricolor Holdings filing for Chapter 7 bankruptcy. All right. And these bankruptcies from these auto loan companies are tied to malicious, intent, like fraud, illegal activity to misrepresent the revenue, double booking assets, and a lot of things that you would do if you're trying to hide losses. It all starts probably innocently with saying, oh, you can't show investors how bad we're actually doing. Then it turns on to full-on fraud, I would imagine. All right, failures hit banks that lent into those sectors. So a lot of banks have exposure to auto loans. It's a huge industry. All right, JP Morgan wrote off $170 million tied to Tricolor exposure, the company that filed Chapter 7. Jefferies, Western Alliance, and Zion's Bancorp plunged more than 10% on Thursday after they revealed they have hundreds of millions of dollars in potential loan losses themselves, in addition to JP Morgan. All right, the reaction by the market makes sense. All right, treasury yields fell. Investors fled to safety, so they bid up the bond market. They started allocating money from the stock market because you look at the sell-off, all right, and we don't actually think about it in terms of flow of capital. But you ever want to find out the truth about anything, follow the money, they say, including me. I say that as well. Follow the money. Even my kids are 5 and 3 years old, and I tell them that. not on a daily basis, but pretty often. So the stock market's selling off means you're selling your assets off. All right. The prices are dropping because there's a lot of sell orders. But have you ever wondered, where does that money go that's sold off? Well, it goes into safe haven assets, things that, you perceive to be safer. One of those things is traditionally treasuries. Those are government issued, debt coupons that you're basically funding the government in the form of debt. It's not equity, but you could roll over to debt as a safe haven, and you put into government bonds. But as more and more money comes out of the equity markets, it goes to government bonds. The bond market gets bid up, which means yields go down. Why? Well, they don't have to pay you as much because you're afraid and you're going to go there anyways. So why would they pay you a large coupon price to attract your money when it's going to come here anyways? You're going to say, I'm going to cut what I'm going to give you, and you're still going to come. So the yield rates drop. It's a lot more complicated than that. It's an oversimplified explanation, but it is the reality of the situation too. So that's why treasury yields fell. Fed's repo facility was tapped for a second straight day. Like, Fed is running out of liquidity. They're at the bottom point of the liquidity marker where it almost becomes an emergency for them. Like, think about this. The Federal Reserve banks are starting to run out of money. And repo facilities are like for emergency loans and overnight lending to the banks. And the last 2 days I saw a chart showing that the Fed is kind of tight on the cash crunch. All right, global equities dropped across Europe and Asia on this front. And, perfect. Donna just told me. I just checked in with Donna to make sure it's working. She said it's working really good. Yes, we're back on live, and we can do this every day. Anyways, I got distracted. Global equity markets are down with Europe as well. Asia, U.S. futures, everything is down. It's treating this as a potential credit contagion story. All right, but it's not systemic. It's not yet systemic, but anxiety is kind of spreading fast. And I don't think this becomes a massive credit, annihilation event for the market in a big bear market, but it comes at a pretty anxious time already. All right, you're anxious about tariffs, you're anxious about Trump, China. There's a meeting coming up with President Xi and President Trump in a week and a bit. So it just wasn't a great time. We were at all-time highs. We're now lacking a lot of data points based on the government being closed. We've missed a lot of reports. The jobs one's going to come out, but who knows how accurate that one's going to be. We have a Fed event. Everyone's just a little nervous. We were at highs. It made sense to take some profit. Anyways, tariffs spook people. Now, this is just an extra little jab in the ribs that you're like, okay, it's starting to hurt. All right? You're taking a few blows to your ribs as a boxer. You're like, okay, all right, man. I see you. That's what's happening in the market. Today's a very important day, though. Out in the options market, we have some call activity and call walls. The primary one is 67.60 to 67.80. It's up there, all right? But the one that's even above that, 6,800 to 6,820. But watch 67.60. That's the closest one to the 80. That's a 20-point space where dealers are short gamma, and they're going to have to adjust by shorting futures as we get into that price. All right, on the put side, 65.15 to 65.40. That also coincidentally is the low of last Friday. There's a put wall there, which would be support. Dealers will have to buy futures to hedge their gamma. And everything's below that. So we don't really have too much put activity to the downside until you break that low, which is getting closer. Now, let's get into Georgia's daily levels. I only really follow 5 levels, and they're not my levels. They're levels the market sets that I follow. So I follow the prior day high, overnight high, prior day, I'm going to do it this way. Prior day high, overnight high, prior day cash close, overnight low, and prior day low, okay? And depending on where they are, they might change priority in order, okay? But this is how it looks as of today. Prior day high, 67.50. I'm not going to go to the tick, all right? Let's just round it up to a point. 67.50, okay? Overnight high, 66.72. What does that tell you? See, this is why I follow these levels so closely, because of their ability to give you such insight. And then after I watch these levels, it forms the base of my entire trading plan, which I'm going to go into next really quick. All right, 67.50, 66.72 means the overnight high was 80 points lower than yesterday's high. All right, that's pretty not good. Prior day cash close, which is the close of 4:15 p.m. of trade yesterday on the futures, 66.68. So pretty close to the overnight high. So this is not a good picture. Overnight high was up here. We dropped. sorry, the prior day high is up here. We dropped overnight high, couldn't get too much above where we closed, but the overnight low went down as low as 65.71. It's 100 points lower. And then the prior day low was 66.32. So we broke below the prior day low. Now you have the picture. Solid down day on the activity. Last Friday's low is 65.40. All right. We got within 31 points of the Friday low before us, which was a spook event from tariffs. All right. That is not good. So look, tariff escalation with China started this a week ago. Okay. Big money can't just risk waiting around and hoping for the case to go bullish. It had to hedge risk. That kind of drove the sellers. All right. This week we saw some jawboning from China, from Russia. We saw from the Fed. But the reality is the regional bank thing is adding fear, and everyone's afraid of a contagion. So what do? They short futures to hedge their portfolio, and the short futures speculate on the downside. All right, stock market can't catch a break. Today's a big one though, because the sentiment's going to be revealed today. What I think will be for the next 30 days. If we get a strong open today, but we close, all right, we're in for more selling next week. I think the sellers, are probably just getting started. Also, obviously, contingent on some further escalatory events, because to continue getting downside, you need further and continuously escalating negative news. All right, but if we get a weak open today, it's actually good. If we get a weak open and strong close into today's Friday, I think we resume the bull market and try to go for that top all-time high. All right, here's my plan for today. My flip zone is the 66.68 3/4, which is the prior day cash close. All right. Yesterday and the day before, I had a really strong read on the market, and the way that I saw it is exactly how it played out. All right, today, I really don't want to stick my head out and to the chopping block with a strong sentiment, but I will tell you this, because it's Friday, it's kind of goofy, and it's down near the lows, and Fridays are challenging the trade. Okay, but I'll tell you this, above 66.72, I think we bid into yesterday's open and prior day high, which is a 31 in the 50 level. Below the 66.32, I'm a seller. Selling rallies targeting down to 65.71 quarter. All right, if it gets really bearish and ugly, we might break last Friday's low, and that right there is a scary prospect. Okay, I'm gonna head into the trading room. I hope you guys enjoyed this morning market update. I hope it all worked. Hope I'm gonna turn around and see it and see, wow, there's comments and people are here and it worked and it was fun. So I'm going to turn around and answer a few comments really quick. Then I got to get into the trading room. That's that. Hopefully you guys enjoyed it. Every morning at 9 a.m. weekday, you have the morning market update hosted by me, George Papazov. So I'll see you on Monday at 9. Take care. Bye. All right. Let's just see the comments real quick. YouTube working today. Awesome. Yes. MS. Good morning. And thank you. I'm really excited it's working. I tried every single day. Today we finally got it to work. And the good news is we found the approach, the reliable, consistent approach. You too, we end this together. It's great to see you. Josiah, you're most welcome, sir. Thank you. We end this together. We end this together. That's actually a dope username. We sure are.